good morning, traders. And certainly if we go through the new week, I think it's always a good idea just to take a step back and look at the week that was and look at the platform by which we can progress through. Certainly the two of the main focuses that we're looking at is the moves that we've seen in US fixed income, specifically in real yield, the inflation adjusted yields, which where the 10-year real yield sits at 106 basis points or 1.06%. Yeah, it's the highest levels for some time. So that does represent a tightening of financial conditions, and it's no mean feat to believe that that's really weighing on some of these high PE, high cash flow stocks. That's certainly what we're seeing in the NASDAQ, where people use the discount rate or the risk-free rate of the US 10-year Treasury as a discounting mechanism to work out what the present value is on those cash flows. And as that US Treasury goes ever higher, you are seeing the cash flows or the present value of those stocks continue to fall. So yeah, high yields, certainly at the back end of the curve this week, will continue to weigh on NASDAQ. And NASDAQ, if you look at it on the daily chart at the moment, is actually trading sideways. Have you pull up a Bollinger Band on that? You know, despite all the pickup that we've seen implied volatility in that index, you are seeing it still tracking sideways. The 20-day moving average is moving nicely within, and price is still sort of respecting those Bollinger Bands at the moment. But that's one index we're watching very closely, and whether you know, that continued gravitating low will really be probably determined to me whether we can see the 10-year moving up both on a nominal basis and those real yields that I talk about there. Specifically, real yields I think are very important in markets like gold as well. But you know, we've seen the US dollar continue to march higher. That has been outperformed on the week last week by the pound. And really everyone's focused on the October 18th summit. There has been a lot of goodwill being pushed from the EU. There has been some talk that they could be looking for a supercharged deal, you know, with 30 to 40% of Theresa May's requests in her Chequers plan being put through. You know, there's still a lot of contention about what's going to happen with the Irish border and whether or not, you know, the actual agreement that potentially could come through, whether that comes through in the next 10 days or not, will be able to get through the British and EU parliaments as well. That's something that is still very much the open debate. But we are seeing a much more progressive and warming rhetoric after what we saw from the Salzburg summit recently, where it showed that the UK and the EU were miles apart. We are seeing much more constructive rhetoric, and the pound was the best performer last week, and it probably will continue to be for this week as well. We've got that you know, cable trading north of 131 at the moment, and that's, you know, trending higher at the moment. We need to break through the recent highs to create a higher high and obviously push the market higher. The market's still very short on the pound. My preference at the moment, if you are looking to trade the pound, I think for me is sterling Aussie. Looks very attractive. It's broken out to the highest levels in a number of years. We're waiting for a little bit of a pullback just to test that what was previously resistance is now support, just around the 185 level. If we can get a pullback into that sort of 185.09 level, which is the prior high, you know, where we see the buyers step in and confirm that is now support, that will be a very strong buy signal for me. So sterling Aussie very much on the radar. This week in Australia, you know, we've got the RBA stability report, and people will be focused on their commentary around the housing market as a key driver. But certainly, you know, what we're seeing in Brexit negotiations will be very much in play, especially when we go into Wednesday. There's talk that the EU will give a more clear blueprint for the UK and their objectives there as well. And we also seen Arlene Foster, you know, from the DUP party going out to Brussels as well. So, you know, given the Irish border and the backstop there is obviously such a key point of conjecture. Any rhetoric around there that looks like she may be on board with, you know, the current plans is obviously going to be a sterling positive or potentially a sterling negative as well. So we're watching that very closely. Euro sterling very much very heavily traded as well from clients and you know, wider market participants. You know, technically that looks weak at the moment. It's broken through some key support levels. It's got the head and shoulders targets much lower than where we are at the moment. So euro sterling, I think, probably is very much a sell on rallies here. The pound's been a very hard currency to trade just because you are so beholden to headline risks. You know, good headlines, negative headlines, it doesn't matter. The pound's getting chucked around by those situations, and that's really where we have to focus on. So very much a currency where we are seeing the trend, and that's the most important part here. The trend in rhetoric has been quite positive at the late. But sterling Aussie, I think, you know, is a key currency cross to watch, and also euro sterling as well. If you're looking to trade, you know, express a positive bias, they're two currencies which look quite positive at the moment. As is euro Kiwi at the moment. Sterling Kiwi had the biggest move to the upside last week in G10. So they're definitely something to watch. In terms of the payrolls, if we take a step back, I think, you know, the headline number was quite weak. The average hourly earnings was fairly in line. But I think what's important now is if you look at the base effects last October was very, very weak in terms of wages. So I think as we go into the next set of payrolls, a consideration for us, especially if we're looking at continuing moves higher or lower in those US Treasuries, is that next month's average hourly earnings, the October numbers from base effects, pure base effects alone, we should get a 3% annualized wage growth coming through. And that could be, pretty negative for US Treasuries, pretty positive for the US dollar. So certainly a consideration. But as we go through the new week, we are focused on what's happening in those Brexit negotiations. There's not really a lot of data to drive in the US. So I think we're going to be focused on whether, those moves on US Treasuries. Here in Australia, we've got the Aussie dollar against the greenback still working quite nicely within that bearish channel that it's been in since January. The lows of those channel coming around 70 cents. I think that's probably where I'll be looking to buy on the week. At the moment, all roads lead to a lower Australian dollar. Copper prices had a bit of a rebound, but if you look at the Chinese currency, the yuan, that's been very weak of late. And that's been very correlated to what's happening in the Australian dollar. So a weaker currency in China, and you get a weaker Australian dollar as well. Now, we have seen the Chinese PBOC cutting reserve ratio requirements to the Chinese banks by 100 basis points. That's a decent clip. That may be a short-term positive for the Australian dollar, but we'll have to see. I think they're fighting fires here, and actually the equity markets is a sell-on rally in China. But it's something we are going to watch because that market reopens today, and something we're going to be focused on there as well. So very much on the Australian dollar. The trend is still firmly lower. As long as it can hold below that 70.85 recent low, the Aussie dollar will be looking to push into that 70 cents. But because that's the low in the regression, we're looking to see whether buyers step in around the figure there.